Holmes, thanks so much for joining us on Wall Street Unplugged again.
It's good to be with you.
Well, let's start out with gold, right? So you have the gold ETF, and just this past week or two, we saw Korea, Japan, UK, several Middle East nations announce that they're going to expand the stimulus package. The next wave of the U.S. is coming out, at least $1 trillion, maybe $2 trillion. I heard $3 trillion on the table, but it might be a lot smaller. So over $10 trillion even before everything that I just said so far. $10 trillion of money from central banks flooding the global markets. Do you see this trend slowing anytime soon in 2021, even 2022? And what does that mean for gold?
I think what's happened is a trend since this past 21 years. It's important for investors to remember that gold has been up 80% of the time. And bullion has outperformed Berkshire Hathaway and has outperformed the S&P 500 almost 3-1. So having an exposure to gold is actually quite wise, because what we've seen this new century is the experimenting with MMT, modern monetary theory. And in different countries, it's being approached differently. But this idea of using monetary aggregates of money printing, jamming it down into the economic system, and what we saw in the U.S. was unique during this past 6 months, is where the Federal Reserve came in and started buying muni bond ETFs and corporate bonds to drive down interest rates so municipalities could roll over their debt, and so could corporations. That's never happened before. But in Japan, it's been practiced that 15% of their stock market is owned by their central bank through the ETF. So I think this MMT takes time. And if we look at what happened the last crisis, it was 2008, 2009, the global financial crisis, and the amount of printing was about $3 trillion the Federal Reserve basically put on their balance sheet. And 3 years later, gold went from 700 to 1900. And if you looked at the data today, gold could easily go to 4,000 over the next 3 years, because as money printing ends up going into the system, and there's really no expression by these finance ministers, central bankers, to stop it. And what also is interesting about central bankers is they quite often live longer in their job than prime ministers and presidents. Look at Greenspan. And he's one of my favorite, because when Greenspan left, everyone criticized him because 6% of the American economy was basically the debt on the federal balance sheet. It represented 6% of the GDP. Today, it's 33%.
That's incredible. Hey, let's talk about gold a little more, because we're going to have low interest rates forever, right? Not forever, but at least for the next 3 years. On the short-term side, long-term, if they get higher, I think the Fed will implement yield curve control. They just have to. We have too much debt outstanding, which, you pointed out off camera, is $27 trillion where our national debt now stands, which is incredible. But what's the biggest factor to drive gold? I mean, we're talking about central banks and stimulus spending, but also, is it a function of the dollar? Is it a function of the 10-year, which is doubled, still 0.9, and still down 50% from January? But what are some of the factors that are going to drive gold? Because we talk about all three of those, and it looks like all three of them are going to be in their favor, but which one maybe influences the gold price and gold stocks even more?
There's two big things to recognize when it comes to gold. There's the fear trade, which dominates most of our world, and there's the love trade. 60% of all gold demand is for love, and it predominantly comes out of Asia. China and India 30 years ago were only 10% of the global footprint of buying gold. Today, they're 53%. The rising GDP per capita in Southeast Asia to the Middle East to India and China are very significant. So every time gold has a big correction, they become this continuous buying. We have the season of lights just ended in India. Then we're going to go into the wedding season, and then we're going to have the Chinese New Year. So you can see this demand cycle. Now we get these surges in gold like we did earlier this year in August and July. And that period is because of negative real interest rates. And there's a very strong, the greater the negative real interest rates, the higher the price of gold rallies. We saw in 2011 when gold peaked at 1900, the 10-year government bond yield was minus 3%, 300 basis points. Earlier this year, the 10-year government bond fell down to 50 basis points, and then it ran up to 97 basis points. Well, that's not much of a difference, Frank. However, percentage-wise, from 50 beeps to 97 beeps, 47 beeps in total, as a percentage of 50, that's a big number. So naturally, gold would correct with that. Do I think that we've oversold? Yes, gold is down over 20 trading days and 60 trading days over one standard deviation. And historically, you get a rally from that as gold goes back and trading at higher prices.
So, Frank, have you ever in your career, have you seen the large cap gold companies as strong as they've been right now? I mean, you're looking at production costs lowered to under 1,000, where, 19, 18, 1,700. Look, that they're incredibly profitable. The margins, I say this a lot. If you look at Barrick and Newmont, if you just took those names out and looked at where they're trading, which is a market multiple, their margins and how fast they're expected to grow over the next 2-3 years, you would think these are technology companies if you just took them out. So have you ever seen them this strong in your career? And you've been doing this for 3-4 decades, right?
Well, I track 100 of these gold producers around the world. And one of the data points I've always had was free cash flow yield. And last year, this time, they still, as a median, had a negative free cash flow yield. The best performing gold stocks had free cash flow yield that was positive. Interesting enough, the S&P 500 had a free cash flow yield of about 2.5% this time last year. And came March of 2020, all of a sudden it evaporated. There's no free cash flow yield for the S&P 500. We see this huge bifurcation in stocks that are growing their revenue and cash flow and having a free cash flow yield, and those that are not. And it's interesting to see that the phenomenon take place. However, the gold stocks for the first time went to a free cash flow yield. The median had a plus 2% free cash flow yield. And then we see Buffett buying Barrick. And we hear more of these gold stocks like Barrick CEOs about their free cash flow yield. And I think that is a really important differential in this cycle. There's greater discipline by boards of directors and CEOs not to hurt that cash flow momentum. And we're going to have a record this quarter on a year-over-year basis will be a record compared to last year on both growth in revenue per share, growth in cash flow per share, and a median positive free cash flow. And if you just looked at the top 10 best gold stocks every quarter that had revenue last quarter above 4 quarters and cash flow above 4 quarters and a free cash flow yield, you beat all gold stock funds.
Yeah, it's incredible. And let's talk about your Go Gold fund, which I think you launched in mid-2017. You invited me to New York Stock Exchange. You rang the closing bell. Truly a big honor. I still have that picture on my Twitter account, actually, which is amazing. But when you look at your Go Gold, it's mostly filled with the top holdings are royalty companies. Do you still feel that way? Because if you believe gold's going a lot higher, right, usually when we see a massive bull market, we're going to see the smaller names, and again, they're not going to have the fundamentals of the larger names, pretty much outperform. That usually happens if you're looking at, historically. Or is it, hey, Go Gold, this is working, and we're going to continue to have these as our top holdings? Yeah, how do you adjust and maybe talk about your methodology for Go Gold, which is kind of incredible?
Well, it is quant driven, and 30% are the big royalty companies, predominantly because they have high margins. These stocks outperform. What's interesting to me is this is the first time in over 10 years that gold stocks in Franco-Nevada showed up in the IBD CanSlim model in the top 50 stocks, and so did Kirkland Lake. So we will go down to $200 million market caps when we're looking at that universe of stocks. But we have found from all the back testing is that this type of model goes down when gold corrects, and it corrects less, but it then marches up about in tune with the gold stocks. Only for about 3 or 4 months, we saw this GDXJ with more speculative stocks all of a sudden start to outperform. But in this past couple of months, GoAU has all of a sudden done what it's done historically. We back tested GoAU over 8,000 hours to see how it did in up cycles and down cycles, profit business models, etc. And we learn a lot, Frank, from JETS. The JETS ETF is very quant driven. It's using mean reversion, and it's using, which is basically gravitational pull. Things always revert to a mean, and at the same time, it's using inertia, momentum, and it's done exactly what it said it would do. That it was to outperform the New York Stock Exchange Global Airline Index, and that quant approach, even after our fees, has done that. So I'm very happy about GoAU. It's risen here. It's been soared through over $100 million. It's done exactly. It's outperformed the GDX and the GDXJ since we launched it. So I'm happy with that.
Yeah, I guess let's talk about JETS. And before actually we get to JETS, I just wanted to get your forecast on gold. I know you're extremely bullish, and I'm not going to tell you where to forecast in 3-6 months, but maybe say to 3-4 years from now. Where do you see gold prices heading?
I think it's quite easy for gold to be at $4,000 if you go and look at what the Fed's balance sheet has done from previous cycles and how it grew, and the psychology of negative real interest rates, and how they're so here. The CPI number here, they say, is 1.4%, and the 10-year government bond is offering you to pay you less than the inflationary rate for the next decade. Gold has always been a great asset class. So $4,000 has been my call. But important for your listeners is the DNA of volatility of every asset class is different. Like we all have different looks, we have different DNA. The DNA of bullion is actually more similar to the S&P 500. And the DNA of gold stocks is 2 times that of gold. So what does that mean? It means that on a running 12-month basis, it's a non-event for gold to go up or down 20%. 70% of the time, that's a non-event. So that means that bullion next year could easily go up 20% from these levels. And what would that? That'd tack on about $400 an ounce for gold. That would take you up to $2,200. Earlier this year, when we had all the panic and the money printing was on steroids and negative interest rates went to an all-time spread, we saw gold go up 2 standard deviations, which was a 40% swing. So that would take gold up from 2,200 and up to 2,600. So I think over the next 12 months, we could easily see gold between 2,200 and 2,600 over the next 3 years. I think you're going to see it test the $4,000 an ounce level.
Okay, let's get to jets. And I'm going to bring this up right now because I know this is an amazing number, your net assets. I mean, how is that compared to, say, 2-3 years ago? I would think that, so you have your U.S. Global Jets ETF, obviously jets for the airline industry, and this is the largest, but I mean, the net assets and the demand right now is pretty incredible. Talk about that. I mean, is it just simply buying the largest airlines, or because this really is incredible to see the growth in net assets and how many people are really, really interested in airlines now?
Well, I'm so blessed. I'm so lucky, Frank. There is no other product out there. So I think we laid out the pipes, cut the information, we create the brand awareness. And what happened is that when it fell 50%, it caught the imagination of millennials. So the millennials and Generation X all of a sudden are stuck at home. They started trading this. They go through Robinhood or Acorn. There's no minimum amount. And as that volume picked up, we then started seeing more hedge funds that would say, I want to short American Airlines because it has the worst balance sheet, but I want to hedge my position. I'm going to short $5 million of American Airlines, but I'm going to hedge by going $5 million long in Jets ETF. And that created more volume and then more volume. And then we saw this group of investors coming in. They were telling us that after the crisis of 9/11, a year later, the airlines are up 80%. After SARS in Asia in 2003, the airlines were up 120%. And after 2008, 2009, 6 months later, they were up 80% again. So you had all these tactical people coming in and taking a position. And we have insurance companies abroad. I go to Israel that have invested $100 million in jets. They're up money. And there was lots of negative news in the spring regarding all these millennials that they're bad investors, et cetera. But I can share with you that at that point, you could get data. And in mid-August, they stopped providing it, but you could see how many shareholders were coming in through Robinhood. And there was something like 25,000 small investors came into jets. And then Buffett came up with his negative pronouncements, and guess what happened? It exploded. It surged 50%. So we know that a lot of millennial investors have made great money, and then it grew to 40,000 people by August just through Robinhood. And it's up from those levels today, all because of a vaccine, the hope of a vaccine being distributed. And also you've seen great economic support all around the world by governments to basically keep this industry vibrant, not having everyone lose their jobs, go on unemployment, because it would take too long for a turnaround, because the onboarding process of pilots, the onboarding of stewardesses, all the training, is better for them to get support and keep them in that training mode for the global economic to turn. And guess what? In America, we fell in mid-April to 90,000 people flying. Now it's over 1 million people a day flying in America. So we do see that turn.
kind of amazing how Buffett really bottom ticked this, right? He got out at the exact long time. And I just want to show something too, guys, because we're seeing the airlines really bounce back off their lows, but still down considerably here from their highs, which, again, the economy will get better. I think it's just a matter of time, Frank. It could take 6 months with the vaccine. It could take a year and a half. When it does, the amount of money in the system is going to explode, and people are just dying to get out of their houses, as you know. So I see this exploding, this trend. I want to get to Bitcoin, which is interesting because you're one of the few people that like gold and Bitcoin. Usually you have to like either or, right? And these people sometimes hate each other, right? Which is kind of funny, even though they're buying it. I think most people buy it for the same reasons. Now, you have a company called Hive Technologies. I've gotten to that financing. And you're seeing this company really start taking off along with the price of Bitcoin and Ethereum, right? People are talking about Ethereum. Ethereum's up like 350%. It's up more than double, I believe, from Bitcoin in a year, but nobody really talks about Ethereum. This company mines for Ethereum and also Bitcoin. Could you explain it? You know what that means. I know what that means. People in crypto know what mining means, but there's a lot of new people that are starting to get into crypto that maybe don't understand the mining process. Could you go over that first? And you are the executive chairman, interim executive chairman of this company. And let's start there.
Well, going back, Frank, I was trying to launch an ETF in the space of Bitcoin and quickly recognized that the regulatory body was very deeply concerned that some hacker got paid in Bitcoin and that would show up in an ETF in the stock exchange. So that wasn't going to happen. So I went to Canada, same thing. And I had this knowledge. And so my friend Frank Schuster called me. We got all the Franks here talking and said his young guns had this idea and this looked really interesting. I had all this knowledge. So I said, okay, I'll put up $5 million. I'll be the institutional. This will be my proxy in digital currency, the trend in crypto. And so we partnered with Genesis Mining. It was a raving success. Crypto took off. Ethereum was like $300, and I went up to $1,400. Bitcoin was $3,000. I went to almost $20,000 in 2017. We raised $200 million, went out to deploy it. And then we had these teething problems and issues with our largest shareholder, and I became uncomfortable with transparency. So I became the interim CEO, and we repositioned the company. Fortunately, we kept the narrative going strong, and in communicating what we were doing, I wanted more accountability and transparency. And this past quarter, of this summer quarter from July, August, September, we just reported last week, and we just have record profits. We made $9 million. We show what happened when we got greater transparency and accountability. We drove down the cost. And Hive is the only public mining company that basically mines these virgin coins. They're untainted. There's no concern for AML or KYC with this because these are the virgin coins. We're the only ones that mine both Bitcoin and Ethereum. And this year we're up 1,200%, much more than any other crypto company. And I was looking at the data yesterday, and we've traded almost 2 billion shares between Canada, over the counter in the U.S. and in the German market. So we're the most liquid name in that space, and we delivered the profits. Now we're very, very fast forward of managing the build out that the Ethereum is going to need 8 giga memory cards, not 4. And we believe that's going to be a big opportunity for us because we're seeing this, what they call Ethereum 2.0 is basically taking supply out of the system. So there's less coins. And we think that in the next 12 months, it's very easy for Ethereum to double from where it is today. And we would be the biggest industrial scale producer. So Hive is participating in that.
Nah, that's incredible stuff. And here, just got to bring up, guys, just the performance of this thing really taking off. Yeah, this is incredible. And we're looking at Bitcoin, right? We would talk about this again, 2016, 17. We've had this conversation a lot when I've interviewed you in the past. Yet, over the past, say, even 9 months, I mean, we're looking at the news flow. MicroStrategy is taking his cash balance, investing in Bitcoin. You saw PayPal. Now you can buy Bitcoin through PayPal, which is 400 million people. You have Square. You have Visa partnering with BlockFi to provide a credit card with reward purchases. You're seeing billionaire hedge fund, very legendary hedge fund managers, Paul Tudor Jones, Bill Miller, a bunch of them saying, hey, we're investing in this. I know you focus on quant, and it's frustrating to me when I just see Citibank come out and say it's going to 300,000 in 2 years, and some people think it's going to 50,000 Bitcoin this year, and then the Winklevoss twins, I think it's 500,000 in 10 years. Could you put a price tag on this with your analysis using your strategies, or is it just, hey, it's more like a guessing thing? I mean, it looks like it's going to go high. There's so much demand. It's much different today than it's ever been. And you know as well as I do that the fundamental landscape and the tailwinds have never been greater for this in gold. But do you actually put a forecast on this and see it rising as much as everybody says, or is it hard to? Or you just say, hey, this is definitely going higher and that's all that matters?
We talked earlier about gold and the DNA of volatility. One of those slides we show is the volatility of Bitcoin, Ethereum over any 10 trading days, and it's substantially greater than gold. So when you try to do a forecast, you have to basically explain to investors that it's easy for it to go up 100% over any 12 months and fall 50%. That's the DNA volatility. But I think with a lot of people are these huge forecasts for Bitcoin and Ethereum, in particular is what's called Metcalfe's law. There's a law that says that as more people use and the supply is finite, then you get this exponential price action. And I think that's where a lot of these forecasters are trying to project where I think it can happen. I think comfortably Ethereum can catch up. Silver and gold ratio, you saw earlier this year was over 110 to 1, and it contracted quickly to less than 70. And you have this power surge in silver. Ethereum and Bitcoin are very similar. So I think it's easier for me to suggest that I think Ethereum can double with Bitcoin where it is today, because what happened earlier this year for Bitcoin is in May, it was called halving. Can you imagine, Frank, if the supply of gold mines, 100 million ounces a year, was to halve, what it would do to the price of gold? It'd be 10,000. So we've had this, all of a sudden, the supply we know is a finite number for Bitcoin, and for the next 4 years, it's just halved. So that supply, and we know from the number of wallets that are growing that more and more people are buying 1 Bitcoin, 2 Bitcoins, half a Bitcoin. So that growth suggests an exponential potential move on the upside.
Yeah, great stuff with Hive. Getting into that, it's incredible to see the run that made. Great play on crypto, on the rise in Bitcoin and Ethereum prices.
So there are other players, Frank, there's other players. There's Riot's Ferry, NASDAQ, and it's had a great performance this year. Mm-hmm. But for investors to recognize that Hive is the only one that does both. It mines Ethereum and it mines Bitcoin. Ethereum is going through a process called proof of stake and Ethereum 2.0. This is not going to happen overnight. And what it does do is almost like a halving taking place earlier with Bitcoin, is that if you want to earn a yield on your Ethereum, then you can post it on a node, but you'll never be able to sell your Ethereum. Once you post it, you're just going to get a yield on it. So what you're seeing is a lot of people are going out for that yield, and it's basically shrinking the supply faster than what's being mined. And there's this new rage back in Ethereum, going back 3 years ago, with ICOs. Initial coin offerings. Well, a lot of those ICOs used Ethereum as their backbone. Today, it's not an explosion in ICOs, it's an explosion in DeFi, decentralized financing. And they use the backbone of Ethereum. So I remain very positive and bullish for the next 3 years of mining Ethereum. And I think the Ethereum has tremendous upside, leverage, and potential.
Yeah, Fred, I just want to say, look, we've known each other for a while. You've got me into the financing of Hive. You invited me to the closing bell, which is great because I thought I was just going to be there, but I was actually up there on a ledge. I think it was Blue Apron that was the early bell, which had hundreds of people there. But it really was a great experience. And to see the excitement that you have, the success you're having with everything, it's great. Just see how hard you work is inspiring. So I just want to say thank you so much for coming on. You're a good friend and love your research. And yeah, thanks. Hopefully you join us again soon, buddy.
And also, Frank, U.S. Global is a public company in NASDAQ, GROW. Mm-hmm. And we reported record earnings and cash flow, and all that's because of Jets exploding, GoAU exploding, and plus we have investments in Thunderbird, which is also doing spectacularly well, entertainment. With this whole COVID lockdown, more people need Netflix and Amazon. They make content for them. They won an Emmy, and we have a big position in Hive blockchain.
Nah, it's great. That's great stuff, Frank. So, Frank, thanks so much for joining us. And again, hopefully you'll join us again soon. Take care, buddy.
Happy holidays.
You too.